How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks. When you open a Moomoo brokerage account, they're going to give you up to 15 free stocks for just trying out their brokerage app. When you put $100 in your new Moomoo account, they're going to give you 5 free stocks. When you put $1,000 in your new Moomoo account, they're going to give you 15 free stocks. This is a limited time offer, guys. Don't delay. Get started today. There's a link down in the description box of this video. Go click on that Moomoo link. Open up your new Moomoo account today. Go get that free stock. Go get that free money. There is no better time in our entire lifetime, guys, to build wealth than right now. Everything is in your favor. Everything is set up for you to be successful as an investor, to earn your income, keep that income, and then take that income that you keep and multiply it. And the way I multiply my income, guys, is through assets. Assets that increase in value over time. And ultimately, they generate passive income. So therefore, I control my own financial destiny. I have my financial power. And I have control of my time. But without that, you don't get to participate in those things, right? So it's important that you transition yourself from a consumer to an investor. How do you do that? Click it on that link down in the description box. Open up that Moomoo account. Put yourself in a position where you're ready to start buying paper assets to build wealth. I'm going to send you my wealth transfer blueprint video. It's going to walk you through my 3 big boy blue chip paper assets that I'm buying in 2024 and beyond. Matter of fact, I just bought some more this morning before I got on this live stream. Pulled the trigger on some SPLG and FTEC. And I plan on later today pulling the trigger on some Magnificent 7. So, guys, no greater opportunity. What's getting ready to happen over these next couple of years with interest rates will put us in a position where assets are going to increase in value, and they're going to keep increasing in value. But you got to get in the game. You got to position yourself. You got to be ready to take action. The only way you do that is you got to click on that link, open up your Moomoo brokerage account, and get yourself ready to go. Like I said, send me an email and let me know you've opened that Moomoo account, and I'm going to send you that wealth transfer blueprint video that walks you through exactly what I'm doing. Now, that doesn't mean you got to do what I'm doing, but if you want to copy my plan, more than welcome to. But ultimately, your financial freedom is you. Not me, not somebody else. It's you. It's what you do with the money that you earn. See, your number 1 tool to build wealth is your income. The number 2 tool you have to build wealth is what you do with your income. Number 1 tool, income. Number 2 tool is what you do with that income. Where a lot of us get ourselves in the weed and we get into trouble is we do the wrong things with our income. We make income, we just do all the wrong things with it. That's the key, guys. Those two things are the key to building wealth. Your income and what you do with that income. See, what I do with my income is I put it in assets that build wealth over time and create passive income. That's what I do with my income. The question is, what are you doing with your income? Because 99% of us are making income. What are you doing with it? Are you taking that income and investing it in your wealth? Or are you taking it and investing in someone else's wealth? You got to answer that question, guys. I can't answer it for you. But if you want to build wealth and get to your pot of gold at the end of the rainbow, you need to answer that question. I believe you can get to your wealth, but it doesn't matter what I believe. Really, it's what you believe, right? It doesn't matter what I believe. I'm just a guy on YouTube. It doesn't matter what I believe. It's what you believe. But the only way you get there is you got to build assets. You got to take that income and invest it in assets. Well, guys, let's move on and get into unpacking this information that I got for you today. And as you can tell by the title of this particular video, you got some major banks, some major financial institutions that are warning the Fed. They're warning the Fed, tread lightly when it comes to interest rates. Tread lightly when it comes to the reduction of these interest rates. Tread lightly. You even have one major financial institution that has come out on record and said the Fed ain't gonna even reduce interest rates in 2024, despite the fact yesterday they said they were, basically calling the Fed a lie. I'm just telling you, you've got a major financial institution out there who is saying the Fed is not going to even reduce short-term interest rates in 2024. And guys, if that happens, this is my opinion. You may disagree, but this is my opinion. If the Fed doesn't decrease short-term interest rates like they said they were going to do in 2024, we're going to see problems in the stock market, with crypto, and in the real estate market. The only thing fueling the stock market and crypto right now is enthusiasm. That's what's fueling this whole thing. Why do you think stocks are doing what they're doing? Why do you think crypto's doing what it's doing? It's because of enthusiasm. The market has enthusiasm because they believe when these rates come down this year, they got a better chance for their assets to go up in value. So a lot of people are in the market now waiting on that. They're buying because they think, hey, rates coming down, assets go up. But guess what? What if the Fed rug pulls? What if the Fed don't decrease short-term interest rates these 3 times like they said they were going to do? What do you think is going to happen to stocks, crypto, real estate if they rug pull us? And the market is not happy with that, which they won't be. Investors won't be happy with that. And when investors are not happy and they don't have clear direction, what do? They yank their money out of assets, or certain assets. Not all assets, but certain assets. So we're going to talk about that today. And we're also going to talk a little bit about stocks, kind of how stocks did yesterday after the Fed chair, Federal Reserve had concluded their meeting. We're going to talk about that. We're going to also talk about crypto. No, y'all, I got to give y'all my daily dose of crypto. So we got to get to that as well. So we got a lot to cover. And then we're going to talk about the middle class. You know, the middle class and why are they not experiencing this amazing economy? Why isn't the middle class experiencing this amazing economy that everybody keeps talking about? Even the Fed chair yesterday, Jerome Powell, he even mentioned the economy is doing well. We had 3% GDP last year. They predict 2% GDP this year. Why isn't the middle class people experiencing that then? We're going to talk about that. I got an article that I'm going to walk y'all through that just goes to show y'all everybody ain't participating in this boom economy, guys. I told y'all that. Everybody's not participating in this boom economy. Most people are down here in this bust economy. They're not experiencing this 3% growth and all this, all these assets going up in value and people selling stock and realizing, hundreds of thousands of dollars in profits, millions of dollars in profits, billions of dollars. No, the middle class isn't experiencing that. Why is that? We're going to talk about it. But first, let's talk a little bit about a complete wrap up of the Fed meeting over these last couple of days, the 19th and the 20th. At the end of the day, the Fed basically came out and said what I believe that they were going to say. We're not increasing short-term interest rates. We're not decreasing short-term interest rates. We're just going to leave them the same. That's exactly what they did. But they also came out with some information that I thought was interesting. They talked about GDP and how GDP was over 3% in 2023, despite the fact interest rates were sky high. They also talked about GDP being over 2%. They're predicting it to be over 2% in 2024, despite interest rates being sky high. Right? They talked about how well the economy is doing and what they believe is going to happen in the future with the economy. They also talked about interest rates. They went on record to say they're going to decrease interest rates 3 times. Some people say 75 basis points. Some people say 100 basis points. But if you listen to the Federal Reserve Chair, Jay Powell, he basically said over the next 2 years, 2% decrease. So if you're at 5.5 today, by 2026, you're going to be somewhere in that 3.5, 3.75 range. That's basically what they're predicting. Now, of course, he also went on record to say all of that could change if inflation goes back up. They have not taken off the table that they won't increase short-term interest rates. I've already told you guys this week, there are Federal Reserve members who actually believe interest rates should be increased if certain things happen. So even though yesterday they had a unanimous decision to leave interest rates where they are, there is not a unanimous decision to decrease short-term interest rates. There's not a unanimous decision to do that yet. So more to come on interest rates. All we can do right now is believe what we're hearing, but a lot of people don't believe it. And some of your too big to fail banks are sending a warning signal to the Federal Reserve Chairman to tread lightly. There's a lot at stake. And we know the Federal Reserve understands there's a lot at stake, right? Their main objective here is to continue to have price stability in our economy, to get inflation to 2% to give us price stability. That's their number one concern. And the number 2 concern is to maximize employment, right? We don't need a super red hot labor market, but we need a labor market that's balanced, right? It maximizes employment, but balanced. That's their 2 main objectives, right? And that's what they continue to work on. So I think yesterday and I think Tuesday were just, nothing new came out of that for me, right? Nothing new. I think what the market was paying attention to was, will they go on record and say that rate cuts are still a possibility in 2024? And they did. 3 of them. 3 of them. But let me read something from one of your major financial institutions, one of your largest Wall Street firms. Here's what they got to say about that. This is what I found interesting. Here's the headline. Top U.S. asset manager, Vanguard, big boy, heavyweight, doesn't believe the Fed will cut interest rates this year. That's Vanguard. You're talking about one of the behemoths in the investment game, right? One of the originators of the mutual fund, the ETF, the index fund. They got about $9 trillion under management, guys. That's a lot under management. You're talking about $9 trillion under management. Vanguard has it. And Vanguard is questioning whether the Fed is going to reduce rates or not. Listen to this. Vanguard doesn't expect the Federal Reserve to cut interest rates this year, defying the view from Fed officials that the central bank remains on track to reduce rates 3 times in 2024. The Fed on Wednesday left interest rates unchanged for the 5th consecutive time, as expected, keeping its benchmark overnight borrowing rate in the range between 5.25 and 5.50. And the benchmark rate, guys, is simply this. That is the rate banks borrow money from each other. That's not the rate you borrow money from a bank. It's the rate that banks borrow money from each other, right? They call that the Fed funds rate. You and I, we borrow money based on the prime rate. The prime rate is 3% higher than the Fed funds rate. See what I'm telling you? You got people out here in our economy, middle income earners, lower income earners, not participating. Why? It's hard to participate when your interest rates are 8.5%. It's hard to participate. Let me keep going here. It's also said it still expects 0.75 percentage cuts. They're saying the Federal Reserve keeps saying this, right? But Vanguard don't believe them. Check this out. The message fueled a market rally in both the U.S. and beyond. So that means when the Fed concluded their meeting yesterday and got that positive guidance from the Federal Reserve chairman, got them 3 rate cuts confirmed, stock market went crazy. Not just here in the United States, but around the world, right? That just shows you guys how important those rate cuts are. That right there should tell you, if they rug pull us, what's going to happen? See, it's telling you right now how important those rate cuts are. And if the Federal Reserve rug pulls us and don't give them to us, what do you think the market is going to do? Down, 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 down. The 3 major stock market indexes in the U.S. all closed at record highs on Wednesday. Record highs, guys. Why did they close at record highs? Them 3 rate cuts. That's it, guys. That's it. It ain't nothing else that's fueling this other than the 3 rate cuts. This is where all this enthusiasm, because people are emailing me, well, hey, if interest rates are so high, why in the world is the stock market at all-time highs? Pretty simple, guys. The 3 rate cuts. 3 rate cuts. It's optimism. It's enthusiasm. It's people knowing if I can buy now before the rate cuts, when the rate cuts kick in, my assets are going to go higher. That's why people are buying. I'm getting this question, oh, golly, you keep saying interest rates high, so when interest rates are high, the stock market is low. Why ain't the stock market low? Because of enthusiasm. Guys, you got to understand how this works. See, everybody don't think, oh, I'm going to sit over here until all the assets go dirt cheap. That's when I'm going to buy. That ain't how the real investors work, man. See, real investors will buy whenever they need to buy if they think it's going higher. They'll get in. See, they're getting in now, even though to you and I, it seems, oh, golly, it's high. And it is. It's all-time highs. But guess what happens to all-time highs? They get broken. There are new all-time highs that are established. You think an all-time high is just going to beat it? That's it? It'll never go no higher? You think the S&P 500 is not going to go higher than 5,200 points? Are you kidding me? You don't think it's going to go higher than 5,200 points when they start reducing short-term interest rates? Come on, guys, we can't be that naive. If we're going to be investors, we got to understand this. No, it's going higher. That's why people are buying now, because they know it's going to go higher when rates drop. Just telling you. So you sitting on the sideline thinking, oh, it's too high. It ain't never go higher. I got to wait till it drops. See, that's what they want you to think. See, that's what they want you to think. That's what the 1% want you to think. They want you to think like that. See, stay on the sideline. Let us buy all these assets. And then when they go to a new all-time high, then we want you to jump in so we can sell them and make a profit. I'm telling you right now what's coming, guys. It's optimism that's fueling this whole thing. Remember we talked about crypto, and I told you guys there has to be a catalyst for crypto to go higher. Guess what crypto did yesterday? Broke through 65,000 a coin again. Why? Why did it do that? Optimism. Optimism. See, optimism does what to people? Gets them going. Why? Because FOMO, fear of missing out. All the hype, all the hysteria. FOMO, fear of missing out. That's what you're seeing right now. People see all the hype on TV. They see all the hype on social media. I don't want to miss out. Let me get in. That's what you've been seeing. And that ain't even what you got. That ain't even the good part, guys. That's not even the good part. The good part's coming. It's coming. And investors know that. That's why they're buying, right? So let's keep moving on. The message fueled a market rally in both the U.S. and beyond. The three major stock market indexes in the U.S. all closed at record highs on Wednesday, while in Europe, the Pan-European index rose to fresh record high on Thursday morning as investors cheered the prospect of multiple rate cuts. See what I just told you? I just told you that 2 minutes ago. It was all because of rate cuts. This whole frenzy is because the Federal Reserve is saying we got rate cuts coming. That's what's driving this whole thing, guys. Rate cuts. So guess what if the rate cuts don't come? What do you think gonna happen to the stock market? What do you think gonna happen to your little crypto? What's gonna happen to real estate? You already know real estate is in trouble. Commercial real estate is in trouble. It's in trouble. It's in trouble, boy. If they don't cut these rates soon, it's gonna break. Commercial real estate is gonna break, and that's gonna be a trickle-down effect to our whole entire economy. Just telling you guys. So the rug pull thing, we got to watch out for. That's what Vanguard is predicting, that it will be a rug pull. Vanguard is predicting there will be a rug pull. Traders are currently pricing in roughly 68% chance of a first Fed cut in June. See, when they say the market, talk about investors. Investors believe at a 68% chance that the first rate cut is going to be in June. What if it don't come in June? I don't know. I don't know, guys. I don't know. Top U.S. asset manager Vanguard, however, isn't convinced. Its base case is no rate cuts by the Federal Reserve in 2024. Their senior economist at Vanguard said this could have ramifications for central banks and markets around the world. I just told you. Vanguard already told you. If they rug pull us, it's not going to just affect the United States. It's going to be global. Because everybody and their cat getting into the market right now. I don't want you guys panicking though. We're going to wrap this thing up real nicely. And I'll tell you why. As investors, this ain't bad news for us if they do rug pull us. It's not bad news for us, but hang in there. Hang in there. You got to understand, if you're in the building stage of wealth, this rug pull that might happen is not a bad thing. And I'm going to tell you why here in a second. Just hang in there. As you all know, rate cuts have already been priced down from 7 rate cuts at the start of the year to 3. See? Initially, it was 7 rate cuts. Now it's 3. All right, let's keep it moving. So it depends on the reason why. If it is because of the strong economy, especially supply side driven growth, which is also disinflationary, then perhaps the stock market can continue to rally. I don't believe that. I don't believe that. I don't believe that. I don't believe that at all. I think if you don't get them cuts, ain't gonna be no rally. You're gonna be opposite of a rally. What's opposite of a rally? Sell off. That's what I believe. I'm no expert here, but I'm giving you guys my opinion. You make your own opinion and come up with your own conclusion. But I guarantee if we don't get these 3 cuts, it ain't gonna be pretty at the end of 2024. I can tell you that right now. But again, don't panic. That's not bad news for people who are in the building stage of wealth. Stick in there with me. Let's move through this thing again. But also, at Vanguard, what we also believe is that the U.S. equity market is relatively overvalued at this stage. So Vanguard is basically coming in and saying, listen, hey, the stock market, the S&P is overinflated anyways. We don't believe it shouldn't be at 5,200 points. The Dow shouldn't be at almost 40,000 points. The NASDAQ shouldn't be at almost 17,000 points. It's overvalued. It's overinflated. This is what Vanguard is saying now. This is what Vanguard is saying. Vanguard isn't alone in raising the possibility of 0 rate cuts from the Fed this year. Co-founder and CEO of Sycamore Tree Capital Partners, closing bell last week that there's a good chance the central bank doesn't cut rates in 24. We are in the higher for longer camp. All that means is at the 5.5% Fed funds rate, they believe that rate will stay there higher for longer. Instead of cutting that down in 24, it'll stay at the 5.5 through 24 and on into 25. That's what they believe. Global ramifications. With regards to when other central banks will start cutting rates, there is a bit of cat and mouse going on here. I think everyone is slightly afraid to go before the Fed. So what happens is you got the United States with the #1 economy in the world. We're the 900-pound gorilla. We got a lot of baby gorillas in the back of us. Some baby gorillas, we the big 900-pound gorilla. We got some baby ones in the back of us, and they're saying, no, you go first, 900-pound gorilla, and then let's see what happens, and then we will follow you. That's what they're saying. United States, y'all, the big economy. Whatever you do, the world follows. So when the Feds start cutting, then the rest of the central banks around the world start cutting. Right? That's basically what they're saying here, in my opinion at least. I think everyone is slightly afraid to go before the Fed. The Swiss National Bank is clearly the exception, but the inflation problem is slightly different there. So some central banks do what they got to do, right? They're a little bit different. The Swiss National Bank surprised markets on Thursday by lowering its main policy rate by 25 basis points to 1.5%. The move marks Switzerland's the first major economy to cut rates in the sign of growing policymakers' confidence in the battle to tame inflation. So Switzerland went on ahead and did their thing. They was like, okay, America, we love you, but we got to go. But Switzerland ain't no regular schmegular country, though. They ain't no regular schmegular. Switzerland is a very wealthy country with some power players, billionaires, power players, big money there, right? Some of these other little countries, they ain't like Switzerland. They ain't got that power. They got to wait on the United States. So that's what's looking like most people are going to do, right? Let's wrap this thing up and then we're going to move on. I would say the key thing for the European Central Bank is what happens to the euro. Currently, markets are pricing in fairly similar path for the Fed and for the ECB, which is the Fed equivalent over there. We take a slightly different view to that. So make a long story short, guys, that's one major institution that believes there's a rug pull coming. That's Vanguard, big boy, blue chip, creator of the mutual fund, index fund, ETFs, $9 trillion under management. They're saying no Fed rate cuts. I say if we get no rate cuts, that's a setback for a lot of people. I don't think it's a setback for us as investors, and let me tell you why. When you're in the building stage of wealth, here's what I believe. The more red days I can buy at a discount, and I'm holding this thing 10 years, and I'm getting all these red days, year 1, year 2, year 3, year 4, year 5, I'm just getting all these red days, but I'm buying blue chip big boy. I'm buying blue chip big boy paper assets that I know have a historical track record of trading higher and going higher, but I'm getting them at a discount for year 1, year 2, year 3, year 4, year 5. And then all of a sudden they start exploding. See, for me, that's where I build my net worth. I want to buy them on the red days. Now, don't get me wrong. I'm buying right now because I know the rate cut's coming. So I'm buying now because I know the rate cut's coming. But if I felt the same way as Vanguard, then I wouldn't buy. I would just wait. But see, I don't feel that way. I feel right now the cuts are coming. They got no other choice. I told y'all what's happening in the commercial real estate market. If they don't come with something in the commercial real estate market this year, it's going to break. People cannot readjust their loan rates to 7.5%, guys. Not in the commercial real estate market. It's not going to work. See, you already got a problem in the commercial real estate market because the tenants, most of your tenants are going to be mom and pop businesses because 95% of the businesses in the United States are mom and pop businesses. So if I'm a landlord and I got a commercial real estate retail center or a commercial real estate office building or a commercial real estate industrial building, and I got units, most of those units are going to be mom and pop tenants. And guess what's happening to mom and pop tenants? Just like it's happening to the middle class, they're getting squeezed. They have no access to capital. And when small businesses don't have access to capital, they don't grow, guys. And if they can't grow, guess what? At some point, they can't pay your rent. At some point, they can't pay your rent to them commercial real estate landlords. Right? So if I can't borrow money because it's too expensive, if I'm a small business owner and I cannot borrow money because it's too expensive, and all of a sudden I stop growing and my revenue starts to do what? Decline. First thing I'm going to do is say, you know something, I can run my business at my home. Cut out that overhead. I'll run my business from my home. I can't pay this rent anymore. That's what's going to happen. That's what's happening to commercial real estate properties across the United States. Right now, they're losing tenants because most of their tenants are small business owners. And these small business owners don't have access to capital because it's too expensive. So the Fed ain't got no choice, guys, unless they want the commercial real estate market to break. If they want that to break, then don't do nothing. But if you don't want that to break and cause a cascade of problems in our economy, you better lower these interest rates. And another reason they're going to lower the interest rates is because one of the things that the Federal Reserve is responsible for, guys, is to regulate and oversee banks. That's one of the things the Federal Reserve does. They oversee and regulate banks. Now, your big boy, too big to fail banks, they're not worried about. It's those regional banks, those medium-sized banks, those small banks that are in trouble. Why? Because most of their balance sheet is full of commercial real estate loans. That's how they make their money. That's how they make their money. And guess what? If that commercial real estate owner cannot afford to pay a 7.5% interest rate for his monthly payment on his mortgage, he can't do it, she can't do it. Guess what that does to this little regional bank? Now they got a bad loan. Now they got a loan that's not performing. They're not collecting any interest, which is their income. They're not collecting the principal, and the principal belongs to who? Who does the principal belong to when these banks take principal and interest from a loan payment? Who does the principal really belong to, guys? Anybody in the chat can help me out with that. Who does that principal really belong to? We know who the interest belongs to. That belongs to the bank. But who does the principal belong to? You and me, because we're the depositors. They take our money and lend it to these people. So the principal belongs to us in the form of deposits. The interest is income for the bank. But if they ain't getting no income and they ain't getting your principal back, what is that going to do to the bank? They're in jeopardy of failure. Because at some point, you and I are going to go in there and say, hey, Mr. Bank, Mrs. Bank, I want my money. And they might have to say, we don't have it. So what I'm trying to get you to understand, guys, I disagree with Vanguard because too much is at stake, and the Fed knows that. Now, they're going to kick the can down the road as much as they can just to protect themselves, because what they don't want to have happen is they lower too fast, and then all of a sudden inflation goes back up, and then they point the finger at the Fed and say the Fed messed up. That's what we're going to do. That's what most of the 1% will do. They will come back and, oh, the Fed messed up. They prematurely lowered rates. They shouldn't have done that. See, the Fed don't want to hear that. So the Fed is saying, okay, we ain't going to prematurely do nothing. We're going to lower these rates, but we're going to wait as long as we can to lower them. And that's what you see happening. That's why June, in my opinion, is the first rate cut. June or July will be the first rate cut. But check this out. Here's another big boy, too big to fail bank who's sending a warning signal to the Fed. Here's what we got. Bank of America CEO Brian Moynihan warns Jerome Powell, be mindful of relying on consumers to prop up the economy because they're beginning to burn out. How do y'all like y'all bank CEO saying that about y'all? Oh, y'all Bank of America customers out there. You heard what your CEO just said about you. Your bank CEO. What did he just say? Jerome Powell, be mindful of relying on consumers to prop up the economy because they're beginning to burn out. Basically, they're broke. That's basically what he's saying. Consumers are broke. The only thing saving consumers right now is their job. No personal savings, no access to capital because rates are too high. Only thing saving them is their job. And if that labor market softens, and if unemployment goes up, you know what's next. Y'all already know it starts with an R. Y'all know what's next. If the labor market continues to soften, unemployment goes up, you know what's next. And it starts with an R. U.S. consumers turned out to be made of stiffer stuff than experts had anticipated, much to the delight of economists, politicians, and Wall Street alike. But Brian Moynihan is warning the Fed not to push the public too far. Thus far, well-reported, resilient consumers have managed to keep up their spending despite a combination of inflation and higher base rates, mitigating the much anticipated slowdown of the economy. But their cash can only go so far, warns Bank of America CEO Moynihan, who has alerted Fed Chair Jerome Powell not to overshoot on his policies to wrangle inflation back down to its 2% target. Speaking to Bloomberg TV Tuesday, Monahan, a favorite of Berkshire Hathaway CEO Warren Buffett, reported or repeated points he had made previously that the public has been remarkably resilient. If we were sitting here last year, our team was predicting a recession. See, this is what I don't like about these guys. Now, last year, they say we were going to have a recession. Bank of America. No recession. Now, all of a sudden, they just get to change their mind. We was wrong last year, but we're right this year. Boy, these banks are something else, man. These jokers were predicting a recession last year. But now, all of a sudden, we're changing our tune. If we were sitting here last year, our team was predicting a recession somewhere early this year, in 2024. Basically, they were predicting a recession in 2024. Bank of America was. Then they took that off the table as we move through the year, and now they're predicting a 2% plus growth for this quarter. So we go from a recession, Bank of America, we're going to have a recession in 2024. Now they done flipped the script. Now they're saying we're going to have 2% GDP. Boy, these banks are something else. The second largest banking institution in the United States behind JP Morgan Chase isn't alone in positively reassessing its forecast. Just this week, investment advisors Vanguard, which has $8 trillion in assets under management, updated its house forecast to strip a recession out of its baseline view as well. So Vanguard too, both of them talking about a recession in 2024. Now all of a sudden, no recession. See, half of these people don't even know what they're talking about. You know what I'm saying? They're just shooting in the dark, right? They got a blindfold on, shooting in the dark. Don't know what they're doing. The note from Joe Davis, Vanguard's chief global economist, added it had raised its growth forecast for the U.S. from 0.5% to 2% and lowered its forecast for the year-end unemployment rate of 4.8 to 4. So both of them thought we were going to have higher unemployment and go into a recession. Now, all of a sudden, positive GDP lower their expectations to 4% for unemployment. You've gone from negative to slightly positive, he continued, but that is returning to the mean, whatever that means. It's not outsized growth. It's actually slowing down. Okay, that's enough for him. That's enough for Bank of America. These guys, they just be talking about crap that 6 months ago we were going to be in a recession and have dang on near 5% unemployment. Now you just done changed all of that to no recession. We're actually going to grow by 2% in the economy. And guess what? We're not going to have 5% unemployment. We're thinking it'll be more like 4%. But now I'm going to warn the Federal Reserve Chairman to slow down, be careful. Listen, guys, here's the deal. They got no other choice but to reduce short-term interest rates. Like I've already told you, that's my opinion. You do not have to agree with that opinion. But they have no choice. And I told you why. They got to, man. The commercial real estate market is teetering on the brink of destruction. Small business owners are teetering on the brink of bankruptcy. You guys know bankruptcy filings are going through the roof. Bankruptcy filings are going through the roof. See, we talk about this great economy that we're living in, but really it's two economies. I keep telling y'all this every single day. We have two economies. You have the economy up here where the wealthy roll, and then you got the economy down here where most of the middle class and lower income earners roll. Those are the two economies. And if you don't believe me, here's an article right here. I'm a middle class parent with 2 kids. Here's our monthly household budget. Now this was dated Tuesday, March 2024. This article, guys. This is what I'm trying to tell y'all. We got these two economies here, and you better figure out which economy you living in. You better figure out which economy you living in, because it's two of them. It's two of them. And this economy down here, the only thing saving it is the labor market. It's the only thing saving this economy right here, the labor market, what I call the bust economy. Listen to this. This is coming from middle-class family. 2 kids. Just hot off the press. People in the middle class earn anywhere from $47,189 to $141,568, depending on their household size and location, according to Pew Research Center. Ignoring taxes, this is anywhere from $4,000 to $12,000 a month. That's what your average middle class American is in that bracket. $4,000 a month to $12,000 a month, right? For upper middle class earners, this kind of money can go a long way. But for those earning on the lower end, or those with a higher cost of living, it can be rapidly disappearing if you're not careful. So I keep telling you guys 4 financial principles. You got to live by them. Because a lot of people email me and ask me all the time, well, how do I get myself out of this trouble? And I give them those 4 financial principles. If you live by these four financial principles, it doesn't become how much money you make. What it becomes then is how much do you keep? See, I can make a lot of money, but if I don't keep any of it, I don't build wealth. I can make very little money, but if I can keep a part of that money and invest it over a number of years, I can still build wealth. Many middle-class families still make it work. However, regardless of where they fall on this broad scale, a middle-class mom of 2 about her household budget and how they make ends meet. Here's what she told us. The average American household spent about $72,967 in 2022. That's the average American household, guys. Spent around $73,000 on average, when you average out everybody, right? According to the most recent BLS data available, this equates to roughly $6,080 a month. It covers all household types, regardless of the number of people. Amelia Thompson's household, this is the mom of 2. Amelia Thompson's household consists of herself, her husband, and their 2 energetic children, ages 8 and 5. She said, our monthly household budget typically falls around $4,000 a month, a sum we found sustainable over the years. The budget covers everything from utilities, grocery shopping, education expenses, leisure activities, to keep everyone happy. Working on a tight budget can be tricky, but the Thompsons have managed to make it work without too much difficulty. Here's how they do it. $4,000 a month, guys. $4,000 a month in the United States. That's what this family of 4 live on. $4,000 a month. And they got to cover housing, utilities, grocery, insurance, personal care, health insurance, transportation. Can somebody tell me what's missing? What's missing in that, what they use that money for? Can anybody tell me what's missing there? They got housing, utilities, groceries, insurance, personal care, health care, transportation. What's missing? No investing. I ain't mentioned nothing about retirement. I ain't mentioned nothing about emergency fund. Ain't mentioned nothing about building wealth. Keep telling y'all guys, this is where most people are trapped. That's why 100+ million people in this country have no retirement savings, because they're trapped in the same cycle here. Do I pay rent or do I invest? Do I pay utilities or do I invest? Do I buy food or do I eat? That's what I'm trying to tell you guys. $4,000 is not a lot of money, guys. Y'all know this. Anybody out there listening to this live, y'all know $4,000 a month when you got a family. That's not a lot of money. That's not a lot of money. That's not a lot of money. One of the fastest ways to blow through a monthly budget is to spend money without a plan. See? Guess what? That's one of the 4 financial principles. Live on a plan. Live on a personal budget. One of the fastest ways to blow through your monthly budget is to spend money without a plan or pragmatic approach. For the Thompsons family, with their $4,000 a month budget, it's prudent to be conscious about their spending. We pride ourselves as a financially conscious family, always working towards a balance between responsible spending and ensuring we live a satisfactory life. See, this is one of the things, I'm sorry, guys. I keep telling y'all, and I'm going to keep telling you till the cows come home. If you want to get to financial freedom, you're going to give up something financially in the short term. Now, I'm not saying y'all just stay home and never do anything. But what I'm telling you is you got to pick. You got to choose. You can choose to splurge and do everything you want now, experience everything you've ever wanted to experience, go on excursions, trips. I'm going to live for now. I ain't going to worry about tomorrow. You can do all of that. But there's a price to pay for that. The price you pay is later on in life. When them kids gone. See, at some point, them kids going to leave and they're going to go live their own life. Mama, daddy, thank you. Appreciate you. But I'm out of here. Then what you going to do? Then what you going to do? When they gone to live their life, to start their family, and you haven't properly prepared financially, what are you going to do? So I'm telling you, you better give up something in the short term to get what you need in the long term, guys. You got to give up something in the short term. I ain't hear one thing in this article about anybody doing any type of investing for financial freedom. I didn't hear one thing in this article. Not one thing. I haven't heard one thing in this article about saving and investing, getting to financial freedom. Nothing. I didn't hear anything in here about this $4,000 going towards college tuition. Nothing. So for me, these people are living down here in this bust economy. They're living in this bust economy. And a lot of us just, that's what we accept. We just simply say, you know something? This is my life. I'll never get out of this. And that's not true, guys. You can get out of it, but you got to have a plan. You got to live by some financial principles to get yourself out of it. You got to live on less than what you make. I don't care what people around you think. You have to live on less than what you make. I don't care if you make $2,000 a month. You better figure out how to live on one. I'm telling you, you have to. Or you're going to be in a situation later on in life, you're going to be, I'm telling you, it's not going to be pretty. I get emails all the time from people, 50, 60, 70 years old. And for whatever reason, they didn't plan financially for their golden years. They didn't plan financially well. That doesn't make them bad people. They just didn't do it for whatever reason. Maybe they just didn't have enough financial literacy. Maybe they just felt like something else would happen for them. My point is this, guys, we have to plan for it. And the way we plan for it is we got to live by some financial principles. We got to live on less than what we make. We got to live on a plan. Just like they mentioned in this article, you have to plan. You have to have a budget. And you got to know where every single penny goes. You got to account for it. You got to know where every single penny coming in, and you got to know every single penny going out. The name of the game is to do what? Live on less than what I make, live on a plan so I have money left over that I can invest. Because at some point, I'm not going to be able to work. I'm not going to be able to trade time for money. And if I got kids, at some point, I may want to help them with college. College ain't for everyone, and every kid doesn't automatically get college paid for them by their parents. I know that. My college wasn't paid for by my parents. I got a football scholarship. I was a pretty good athlete. So I poured my energy into that because I thought that was the ticket. Unfortunately, it wasn't a ticket. So then I got home at 26, figured I wasn't going to retire rich from the NFL. I got home and I had to go get a job. I got an email from a gentleman yesterday. Hey man, what's going on? Yep, I'm unemployed, but I'm looking. Tell me what I need to do to build wealth. Get a job. Get you a primary income. That's the number one thing you need to do. You need to get a primary income. I don't care if it's going to work for somebody or starting your own little business, but you better get you a primary income. That's number one. Ain't no building wealth without income. When people email me that, I tell them right off the bat, ain't no building wealth, guys, without income. There ain't nothing I need to be talking to you about other than go get income. Go get a primary income. Once you get that primary income, then what did I tell you? The second most important thing is what you do with the income. So when you get the income, then it becomes, what do I do with it? I got two choices. I can take that income, I can throw it up here in this bust economy to the 1%, or I can take that income and start directing it to assets that build wealth. Notice I said assets, not liabilities. We get those two confused sometimes. See, liabilities don't produce no income. That's a liability. Only thing it does is take money out of your pocket. That's a liability. I don't care what you buy. If it's taking money out of your pocket, it's a liability. I don't care what you think it is. It's a liability, guys, if it's taking money out of your pocket and ain't putting nothing in. Assets put money in your pocket. That's all you need to know about assets and liabilities, in my opinion. I don't think you need to know anything else. That's the question you ought to ask yourself. When you get ready to go buy something, especially a big ticket item, when you get ready to go buy that big ticket item, you better ask yourself this question. Is it going to put any money in my pocket? And if it's no, I would rethink buying that. Because what you're doing is you're taking money that could be compounding and multiplying itself in a real asset that at some point down the road is going to produce a massive amount of money for you. But that's up to you. You got to figure that out. Stock market is one of those ways. It's one of the big three. Paper assets is one of the big three. The other two are real estate for income and businesses. Those are the three things, guys, you should be putting your money into, in my opinion. Again, not your financial advisor. You do whatever you want to do. I get an email, a comment from one, oh, golly, I listened to you about crypto and I lost $5,000 in crypto. No, you didn't listen to me. I'm just giving you my opinion. Because if you listened to me, you wouldn't have never been in crypto. What do you mean? It's about fire. No, I can't make you do nothing with your own money, sir or ma'am. That's on you. I'm giving you my opinion. Just my opinion. Ultimately, at the end of the day, your financial freedom rests on your shoulders. Don't put it on my shoulders. Or don't put it on somebody else's shoulders. Oh, they gave me bad. No, nobody gave you bad advice. Nope. At the end of the day, I take in information, I throw out what I don't need, and then I got to be responsible for my decisions. Nobody took your hand and told you to click the mouse. How could I grab your hand and make it click the mouse to sell something? I can't make you do that. No, I can't make you do that. Just like nobody can make me do anything that I've done in the past that didn't turn out right. I just own it. I don't make excuses or try to blame other people for my mistakes. No, I made the mistake. That's all. I made the mistake. Now it's time for me to correct that mistake and move forward and build wealth. Because no one else is going to build wealth for me, guys. If I don't build it, it doesn't get done. If you don't build your wealth, it don't get done. Right? Live on less than what you make. Live on a plan, personal budget. Stay out of consumer debt. Stop buying liabilities that you think are assets. Oh shoot, I got a first edition Babe Ruth baseball card and it's worth 10 grand. Yeah, no, that's not going to produce no passive income. The only way you get anything from that is you sell it. It's not going to produce any passive income, so there ain't no asset. I told y'all, assets produce income. So I don't care what collection you got. If ain't no income attached to it, in my opinion, it ain't an asset. The assets that I want in my portfolio, they need to generate income every single month. That's the only assets I want in my portfolio. I don't want no assets in my portfolio just sit there and collect dust. And they worth whatever somebody think they can pay me for. No, that ain't no asset to me. That's why I tell y'all, my houses that I own, in my opinion, they're not assets to me right now. They liabilities. Because I got to take money out of my pocket every month to take care of them. They're liabilities right now. At some point in the future, I'm fingers crossed, they turn into an asset and return some of my capital back to me. But there ain't no guarantee of that. That's the chance we take when we buy primary residences that we just live in and don't do anything else with them. We may or may not get our money back. But I guarantee you, if I would go out there and buy me a property and put a tenant in it, I'm gonna get money back. I keep that property long enough and keep that tenant in there long enough, I'm gonna get all my money back. Why? Because people need somewhere to live. People need somewhere to live. But when I go out and buy these houses that I don't derive no income from, and they just sit there with maintenance costs every single month and year, utility costs every single month and year, real estate taxes every year, homeowners insurance, flood insurance, mortgage interest. Listen, guys, if that's where you want to pile all your money into, and you're around here house rich, no real assets that create income, then do that. That's your financial freedom. Didn't do that. If you want to put yourself in a position to really build wealth, you better start taking your income and putting it in assets that build wealth. Stock market through paper assets, real estate for income through rental property income, appreciation in the property because you're buying good locations, and then businesses. Those are the big three. If you're not putting money into that, I don't know what you're putting it into, honestly. Those are the only three for me. Now, you can do whatever you want to do. I also got a quick question, a question yesterday from one of my guys talking about taxes. He was asking me, well, what are some things I can do to reduce my tax liability because I'm paying money every year to the IRS? First off, guys, I pay taxes every year to the IRS. See, I'm not going to sit here on YouTube and lie to y'all and, oh yeah, let me show you all these strategies where I never pay any taxes and I never do any of that. No, I pay taxes every year. Bunch of taxes. But I only pay my fair share, and I'm okay with that. But see, the difference is I have a professional CPA, a professional who actually sits down with me and I tell my CPA what I need accomplished. And he and I work together to accomplish that. See, he knows the tax code. I don't. He knows what I should be doing in order to reduce my tax liability. And that's what I told this gentleman. I said, guys, I told him, I said, man, I'm not a CPA. I can't tell you what to do. What one thing I can recommend is sit down with your CPA. If you got one, sit down with that CPA and tell them what you're trying to get accomplished. We sometimes forget these people we hire, they work for us. But if you go in there and don't never tell them what, they just gonna do whatever they want to do. They don't care if you pay taxes or not. Most of them, they just doing your tax return. But if you go in there and sit down and say, listen, what can I do to not have to pay this $10,000 or $15,000 a year? One of the things might be set up an HSA. You can fund that thing. If you got a family, you're under 50 years old, I think you can fund that thing to a certain amount. Then you can take that money and use it during the year for medical expenses. And then guess what? You get to deduct the whole thing from the tax return. Now, that ain't in every case. That's why you need to go see a CPA, certified public accountant, to let them walk you through the thousands and thousands of opportunities to reduce your tax liability. But you need to go get a professional CPA to help you with that. Not one on YouTube. That's my advice. And that's what I told him. Go see your CPA. Sit down with that person. Tell them what you're trying to accomplish. And you guys strategize together to get there. And if they can't do that for you, go find you a new one that can. Because there are plenty of them out there that know that. Right? But that's what I'm talking about when it comes to your money, guys. We got to get smart with our money. We got to know how to maximize the opportunity to grow that money. And if I'm giving unnecessary money to Uncle Sam because I just don't know, I could be deducting this stuff. I could be itemizing. I could be deducting. I could have this that could offset some of that. It's legal. That's the reason you see the 1%. A lot of these people in the 1% barely pay any taxes. They go get really good CPAs that find every loophole legal to reduce their tax liability. Why shouldn't we do that as 99%ers? We should. Now, again, I pay taxes every year, but guarantee you this, it's only my fair share. No rock is unturned. That's legal. Every legal maneuver I can maneuver, it's maneuvered. And I just pay my fair share and I go about my business. See, I'm not one of these people that get caught up in, oh God, I can't pay any taxes. I'm never going to pay taxes. Don't pay them then. I'm going to pay mine. I'm an American. I live here. It's the greatest country in the world. Boom. I'm going to pay my taxes. Period. So there you go, guys. Little daily dose of crypto, and then we're going to get out of here. Check this out. So I'm looking at what's happening in the market yesterday, right? And I run across an article about one of my favorite subjects, Bitcoin. Crypto. Bitcoin turns higher after Fed meeting, reclaiming $65,000 a coin. Bitcoin turned higher on Wednesday, reversing earlier losses as investors took a pause from the recent pullback and weighed the Federal Reserve's latest policy decision. The price of the flagship cryptocurrency was last higher by 1.7% at $65,773.23, according to Coinmetrics. Earlier in the day, it fell as low as $60,793. Cryptocurrency strengthened at the end of the Federal Reserve's two-day meeting, where the central bank held rates steady, as expected, and said still sees multiple rate cuts this year, like tech stocks. Bitcoin sometimes benefits from low interest rates and improved market liquidity, which can lead to better sentiment and greater investment in growth assets. There has been an inverse relationship between rates and Bitcoin price. Okay, I ain't even reading all that crap because that's just crap, right? Listen, as I told y'all, there was a catalyst. There was a trigger, right? Remember on Tuesday, Bitcoin was down, way down. And then all of a sudden on Wednesday, after the Fed says, 3 rate cuts, along with the stock market, it goes through the roof. That's the point, though. The point is, it's not going to do that forever. At some point, in my opinion, the market will reject it again, like it did at $73,000, $74,000 a coin. The market just rejected it. The market said, no, we're not paying that. So what does it do? It falls down in price, and then boom, it resets itself. And now it'll try it again. Let's see how it does this time. Here's the deal, guys. If crypto is an investment that you enjoy, then do it. This is my personal YouTube channel where I give my personal opinion. That's all it is. I'm not a crypto guy. I don't believe in building wealth with crypto long term. I think crypto certainly is a tool to build wealth short term if you know the cycles and you learn how to get in on the pump. You get in on the dump and then you ride the pump as high as you want to ride it and then get out. That's what I think crypto is good for. Just a quick, short term pump and dump type profit. I don't believe I can buy it for 10 or 20 years and hold it. For me, I just couldn't. It just doesn't have enough. It doesn't have enough history for me to be able to get comfortable with that. But as I've told y'all, that was the catalyst. That was the trigger. It's going to always need a trigger. It's going to need a trigger because it doesn't have like an earnings report. It doesn't have like, okay, we just, like NVIDIA says, okay, we're introducing this new AI technology that's going to revolutionize the world. So you don't have that. All it has is if the stock market goes, it goes. And I know people are saying it ain't tied to the stock market. Yeah, it is. I think it is. I think it's tied to the stock market in certain aspects. Like yesterday when the Fed said more rate cuts, people jumped back in. Before that, nobody wasn't jumping in at it. It was stagnant. It was stagnant. And then all of a sudden it jumped. So, pick your poison. Do whatever you want to do. If crypto is something that you feel will benefit you and your financial freedom, then do it. That's all. I'm going to talk about it because I'm not a proponent of it. Y'all know that if you rock with my channel, I'm not a proponent of it. I'm a traditional investor. I use traditional investments to get to my pot of gold at the end of the rainbow. I don't use alternative investments. I don't. I just don't. I don't use anything that I think devalues the dollar. That's my opinion. You don't have to agree with that opinion. I think cryptocurrencies devalue the dollar. I think it does. The higher crypto goes, the higher Bitcoin goes, I think it continues to devalue the dollar, in my opinion. I'm no economist. I'm no expert on the US dollar. I'm just a guy on YouTube who has an opinion. And in this country, the last time I checked, it's okay if I express my opinion on my own platform. Because guess what? If you don't like my opinion, you don't have to watch. It's not, no one's forcing you to watch. So if you know I'm gonna talk about crypto and you don't like my opinion, don't watch. It's pretty simple. Just don't watch. That's okay. But there are people here that want to hear my opinion. That doesn't mean that there are plenty of folks on this platform that hear my opinion and they go do whatever they want to do. And that's okay. We have no hard feelings for each other. They understand why I'm here and I understand why they're here. They're here to take information in and throw back what they don't need and then go on with their life. That's what the majority of y'all are here for, and I rock with that. I'm okay with that because I'm the same way. If I'm listening to somebody, no matter where I'm listening to them, I'm taking in information and I'm throwing back what I don't need. And I move on with my life. I make my decision. And then guess what? I'm a big boy. I'm a grown man. I stand by my decision. I don't blame other people. That's one thing about me. I'm not in the blame other people game. When I make a decision, yes, maybe some information might have influenced me, but ultimately, I pulled the trigger. So I got to be a big boy and take responsibility for it. That's what we do, right? So all I'm telling you is I've gave you a lot of information today. You take and do with it what you want. My takeaway from all this information is there's sediment out there that the Fed might rug pull us. I've already told you guys, for us as investors, that's not a bad thing if we do get rug pulled, because it gives us the opportunity to do what? Buy these great companies, these great ETFs at a discount, right? That means they go down in price. I get to gobble them up. At some point, according to history, they go back up in price. As I gobble them up at this lower price, my cost to buy these investments are lower. Then all of a sudden, because I'm gonna hold them for 10 years, they go back up in value. Now I bought them as low as I could buy them. Now they're worth a lot higher. That's where I build my wealth. That's where my net worth comes from. So it ain't a bad thing if we do get rug pulled. If we don't get rug pulled and the Fed does follow through with their 3 cuts, what should we be doing if we're building wealth? We should be buying every single month. We should be in the market 365 days a year. Because I never know when the rocket ship is going to the moon. I never know. They blast off without me, leave me here on Earth, all of my friends on the rocket ship getting rich. I'm down here on Earth in the bust economy. Why? Because I'm sitting on the sideline waiting for somebody to tell me what to do. We got to stop waiting for people to tell us what to do, guys. We know what to do. Get in there and do it. If you rock with this channel, you should know what to do. There is no excuse why nobody shouldn't be out here building wealth and getting to the pot of gold at the end of the rainbow. No excuse. We all should be doing that right now. There's no excuse. I don't care if you got $50, $100. Oh, that's one thing I wanted to touch on real quick, guys, and then we're out of here. Because I've gotten a couple of questions from you guys about the Magnificent Seven. So let me just cover that real quick, just give you my opinion, and then we'll get out of here. So a lot of people are saying, hey, man, you know, I'm putting $100 in my Moomoo account, or I'm putting $1,000 in my Moomoo account, but shoot, NVIDIA is $900 a share. How do I buy that? Well, you don't. Not through the Moomoo app. You don't, right? Because you have to buy whole shares. But here's what I've been telling people, and not really telling people, but recommending they consider. Here's what I recommend you consider. When you look at the Magnificent Seven, obviously you got NVIDIA, who's the 900-pound gorilla. You got Microsoft, and you got Meta. Those 3 right there they're killing it. But if you look at Amazon, you look at Alphabet, you look at Tesla, and you look at Apple, they're all, at least the last time I looked at them, they were all trading under $200 a share. And they're part of the Magnificent Seven. So if I don't quite have enough money to buy NVIDIA, I'm not going to get mad about that. I'm just going to buy what I can afford out of the Magnificent Seven, because all of them are big boy blue chip. Better yet, maybe I don't buy the Magnificent Seven at all, and I just stick to SPLG and FTEC. I stick to the S&P 500 ETF, which is trading about $60 a share, big boy, blue chip, or I buy FTEC, which is an information technology ETF. The good news about both of those, the S&P 500 ETF, guys, it already has the Magnificent Seven in it. They're already in the top 500 companies in America. So if you don't want to buy the Magnificent Seven individually, you don't have to. Just buy the S&P 500. It already has the Magnificent Seven in it. And it's a lot less from a per share price standpoint, but it carries a big punch. It still, in my opinion, gives me the opportunity to build my wealth with an annualized rate of return somewhere in that 8% to 11% range over a 10-year period. I still get that. Or, like I said, you can buy FTEC. Now, it doesn't have all the Magnificent Seven in it, but it does have NVIDIA in there. NVIDIA is in FTEC, that information technology ETF, heavyweight, along with about 373 other companies. So all I'm telling you is, if you can't buy the Magnificent Seven because it's just too, you just don't have the budget for it, the investment budget, don't worry about it. Maybe at some point you will. Or, like I said, there's 4 companies in the Magnificent Seven that I believe are trading under $200 a share. Worst case, I just buy the S&P 500. And again, guys, this is not financial advice. This is not me telling you what to buy. I'm just responding to questions and giving you what I'm doing. If I'm in your position and I got $1,000 to invest, if I'm in your position, I personally will take $500, me personally, $500 of that 1,000 I would put in SPLG, which is my base broader stock market S&P 500 ETF. I would personally take $300 and put it into FTEC, which is a ETF concentrated in the tech market, the information technology sector, the tech sector. And then I would take $200 and I would go to the Magnificent Seven and see what I could afford in that Magnificent Seven with the $200 I got left. Maybe I just buy me a share of Apple. Maybe I buy me a share of Alphabet or Amazon or Tesla. And I call it a day. I'm out here working hard, getting my money up, making more money, side hustling it. Now I got $2,000 to invest. Maybe I follow that same strategy or I dedicate a little bit more to the, it's up to you. Either way, I believe that blueprint is a great blueprint to build wealth. But you got to be consistent and you got to stay in there like I'm staying in there. I'm going to be in there for 10 years doing what I'm doing. You don't have to be in there for 10 years. You don't have to buy what I'm buying. You go buy whatever you want to buy. But for a lot of you guys, you're brand new and you're saying, hey, what are you doing so that I can at least get an idea if it makes sense for me? Ultimately, it's my decision. Ultimately, I pull the trigger on it. It's not you pulling the trigger, but ultimately it's me, but it's nice to know what you're doing. That's the reason I offer the blueprint, guys, not for you guys to just do what I'm doing. I offer it to you because I know a lot of you guys are brand new and are not sure what to look at. So I try to offer you what I'm doing because that may give you a little bit more comfort level, knowing that someone that's done this for 25 years, this is what he's doing. Maybe that gives you a little bit better comfort level until you can get yourself to a point where you're learning and adding more investments that you find out there that you want to put into your portfolio. So hopefully that explains that for you guys who had those questions. And again, if you're confused, send me an email and I'll do my best I can to try to explain it, okay? Well, I appreciate you guys rocking with me. Like I said, if you want up to 15 free stocks from Moomoo, there's a link down in the description box. Moomoo is going to give you up to 15 free stocks when you open a new Moomoo brokerage account. You put $100 in there, they're going to give you 5 free stocks. You put $1,000 in there, they're going to give you 15 free stocks. Just like that. And then you have a decision to make. You can keep those stocks, you can sell them and then go put them in something else if you want to. You can do that. And it gives you the platform where you can start on a monthly basis, weekly basis, however you decide to invest. You can start buying paper assets and look to continue that plan for at least 3, 5, 7, 10 years. I'm doing mine for 10 years. And I have a reason for that. And y'all that rock with the channel, y'all know why I'm doing it for 10 years. Because I'm trying to buy me a piece of ocean. So I gotta really build up my net worth to get this little piece of ocean in the Caribbean. I gotta have the net worth to do that. So I gotta build mine for the next 10 years and just run hard, delay some gratification, put it on the back end, right? Delay some gratification on the front end and get that gratification on the back end when the asset's up. Right now, take what I got, don't spend it on stupid stuff, delay gratification, put it on the back end. Get it on the back end. A lot of us got to do that. We got to stop putting it on the front end, put it on the back end. And that way we can build our wealth faster, right? So appreciate y'all, man. Like I said, if you want that Moomoo offer, go down to the description box, click on that Moomoo link, open up that new Moomoo brokerage account, put you some money in it, get you up to 15 free stocks, and let's start building some wealth together. Guys, lock it in with a thumbs up before you get out of here. I appreciate you rocking with me today. Hopefully you learned something. Hopefully you took this information, you'll disseminate it, throw out what you don't need, keep what you need, and get yourself out here and start building this wealth. No greater time in the history of of investing than right now to build wealth, but you got to get in the game. You got to get yourself in the game. So lock it in with a thumbs up before you get out of here. If you don't mind, guys, I certainly appreciate that. Again, click on that Moo link down in the description box and go ahead and open that Moo account today. Like I said, send me an email to let me know you've opened it and funded it. And then I'll send you my wealth transfer blueprint video that tells you about the 3 big boy assets in detail that I'm buying so that you can copy my plan or create your own plan. I'll also send you the Moo tutorial video that I did to walk you through the Moo app so that you can learn how to use it and start buying your own paper assets and doing the things you need to do to build wealth for you and your family. So I'll send you those 2 videos if you email me. Email address down in the description box and just let me know you opened the Moo account and funded it, and I'll send them to you. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm going to catch you guys on the next one. Peace.